Okay, folks, good morning and welcome to Swing Trading Today. We are late today, very late. We had some technical issues over the weekend, which carried into this morning. Hopefully somebody joins us here. And I want to express my apologies for last night. I had to cancel Sunday Night Futures Live, which I always enjoy. I love that engagement. What we're trying to do technology-wise is to not only stream to YouTube, which is great, but also stream over to YouTube and Twitter as well. And this does not appear to be working. Oh, there we go. Okay, so we have an image now. Good stuff. Okay, this entire weekend has been chock full of technical nightmares. All right. So the topic this morning: swing trading today, QE or not QE? Let's face it, folks. We've been talking about the fact that the Federal Reserve has been in QE mode for several weeks now, and it was only on Friday where Jay Powell finally admitted that, we'll do some QE. So, actually midweek last week. So we knew what was going on, and this is going to continue for the foreseeable future. And there's an article on Zero Hedge, Dear Jay Powell, how stupid do you think we are? And it's true. It's very arrogant, the position that the Fed chair is taking, that the FOMC is taking, in that they won't even acknowledge that it's a QE program. But it is, to the extent that we have QE in place right now that is set to equal, think about this, equal our military budget. But they won't even acknowledge it. They won't apply a name to it. So very concerning. It really is. And if these markets don't move higher with all of this quantitative easing, with the so-called trade deal, which is not a trade deal. I said last week that if we do get a deal, it's going to be a non-starter. It's going to be a horrible deal. It's just going to get us through the 2020 elections. So there is no trade deal, none whatsoever. So what, they're going to buy some more soybeans? They've been buying soybeans. How do we know? I went over this chart last week. We were taking a look for indications that the market was sending us signals that there would be some sort of a deal. And we were taking a look at soybeans on a weekly basis. Remember, that's all the Chinese want from us is our computer chips, which are stealing the technology anyway. Eventually, they won't need us. And soybeans. And you can see that we've been putting in higher lows for several weeks now. More than that, several months now. They've already committed to doing this. So there's no shock here. And what do? After the announcement, we sold off last week. It was a down week. Everybody knew it was coming. And they sold the news. So there was no relief rally whatsoever. Even the stock market rolled over on the news, closing well off the highs of the day on Friday. Let's get to the pre-market activity. Let's go to the dollar. It broke out last 4-hour bar, but then reversed to close down below support again. I think that the dollar is going to weaken up here. Taking a look at the S&P futures. If there's any asset class that should rally and rally a lot higher, it should be the S&P futures, should be the small caps, but they're not. Maybe this is just a pre-market sell-off, no big deal. We had a big move last week. Let's see whether or not they rally back. And these are all 4-hour charts here, folks. Taking a look at let's go with the Russell futures. Now, we booked profits last week as we pierced through this upper band of resistance on the third standard deviation Bollinger Band. We booked profits. We're going to look to get back in now at lower prices on the Russell 2000. Keep in mind that we have bank earnings, which are going to come out this week. It's going to begin tomorrow with JP Morgan earnings. So this week is going to be money center bank earnings. Next week, regional bank earnings. NASDAQ really weakening up here. But this 4-hour bar only opened up about an hour ago. It could rally back. It closes at 9 a.m. Eastern Standard Time. Let's take a look at the price of gold this morning. Gold is rallying right back at the doorstep of the 1500 level. The fact that we closed down below that level last week is concerning, I have to say. And if we do get a rally on these markets, you should expect to see a pullback on gold, silver, the miners, because it's going to be a risk-on environment. And gold, silver, and the miners are not risk-on. They are a safe haven play, but this morning they're looking good. Taking a look at natural gas. We have a breakout here on a 4-hour basis. Nat gas is looking pretty good, but it's been weak, right? So we want to pull back to a weekly view. And at current, on a weekly basis, we have a breakout above a resistance bar here. No new weekly low, an inside week thus far. Let's watch for a breakout above last week's highs. It may be game on for nat gas for the first time in a while. For those joining, thank you for joining me so late here. We are having real serious technical issues, but they're growth pains, you know what I mean? Currently, we're only on YouTube, which is great. I love being on YouTube, but we're trying to expand out our voice to not only YouTube, but also Periscope and Facebook Live, and even Twitch, because Twitch is a gaming channel with a lot of younger viewers on Twitch, and we will try to engage those folks to try to get them educated on the economy, on stocks, and try to get them into the fold. Let's take a look at the bond market. We are rallying off the lows of Friday. I'm still not convinced that this sell-off is over. Last week we had a very strong move on the 10-year Treasury yield, very, very strong. And that put pressure on gold, and that's why you're seeing a rally this morning on gold. Stocks are pulling back because I think we're seeing a bit of profit taking, and perhaps there's a realization that we had no deal on Friday. And frankly, I'm rather disappointed with the Trump administration on this. I'm a big supporter, but I'm rather disappointed. I know in the back of his mind, he had to get this off the front burner because it was going to take the markets down into the 2020 elections. And if Elizabeth Warren's numbers or polling numbers increased relative to President Trump's, this market would be selling off a lot harder in advance of the 2020 elections. And it's not a partisan thing. It's a fact. If you like socialism, then, and she doesn't hide it. I'm not casting dispersions here. She doesn't hide it. You can't be for capitalism. You can't be for the markets. Let's take a look at oil. Actually, let's go to copper first, because copper was strong last week. And look at this. In advance of the announcement on Friday, copper caught a bid. It was strong. What happened after the announcement? We sold off. We attempted to rally overnight, but we were rejected, and now we are selling off on copper. So much for the trade deal, keeping a bid under copper, keeping a bid under soybean prices. And for that matter, keeping a bid under stocks, which are under pressure this morning. But I think that they're going to rally back. They have every reason in the world to rally back. And if they don't rally back, there's something very, very wrong out there. But I do think that we're going to rally back, and we're going to be looking to buy the market this morning. And with that, folks, this little test run, I wanted to touch base with everybody to let everybody know on YouTube that I'm still around, and we missed Sunday Night Live, which I really apologize about. But this time, Sunday, I expect that we should be live on not only YouTube, but on Twitter and on Facebook Live at the same time, broadening our reach and trying to get ever broader. And I really appreciate the time that you spent with me here this morning. And I look forward to speaking to you throughout the week. Everybody have a profitable trading day, and I'll talk to you soon.